What's up guys, it's Nathan here. Today, we're going to be discussing the concerning trend in the Australian rental market that's impacting renters and creating a housing crisis. With record high rental prices, historical low vacancy rates, and resurgence of population growth to international migration, the situation is becoming increasingly dire. In this video, we'll delve into the factors contributing to the current state of the rental market, its effects on capital cities, and the potential solutions the government can implement to alleviate this crisis. So make sure you watch this video to fully understand the gravity of the situation and the impacts on the Australian population. A concerning trend has emerged in the housing market, with new data revealing a significant escalation in the cost of keeping a roof over one's head, particularly for renters. The country is currently experiencing its longest stretch of continuous rental price growth on record. According to real estate website Domain, housing rents have risen 8 consecutive quarters and unit prices have increased 7. And if you find value in this video, please consider hitting that subscribe button, as it really helps out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. This sustained increase in rental prices has led to a record high rental costs across the nation. The report reveals that the housing rents are at an all-time high in every capital city, while unit rents have reached a record high in every capital city except Canberra and Darwin. Domain's Chief Executive of Research and Economics, Nicola Powell, emphasizes that the entire country is grappling with a rental crisis. Data from Domain shows that housing rents have jumped by $135 per week during the March quarter, and units have increased by $140 across the combined capital cities since the pandemic hit. The rental market's outlook remains grim, with no relief in sight for renters. The Domain rent report indicates that units are experiencing a substantial acceleration in rental growth, particularly in Sydney and Melbourne. In fact, Sydney's unit rentals have broken into the 600 territory for the first time. CoreLogic's recent data supports this trend, reporting that Sydney's median weekly rental has now reached $699 per week. However, the report also suggests that rental supply has started to increase, evidenced by a marginally higher vacancy rate across the combined capital cities. This figure is up from last month's record low of 0.8%. Despite this, CoreLogic's data indicates that Greater Melbourne's rental vacancy actually dropped to 0.7% in March. One of the primary factors driving rental prices upwards is increased levels of migration. As international travel resumed in 2021 and 2022, Australia's net overseas migration reached nearly 304,000 new people in 12 months leading to September of 2022. A large portion of these migrants, 61%, held temporary visas, resulting in a significant boost in rental demand. The National Housing Finance and Investment Corporation's latest report echoes these concerns, noting that upward pressure that higher levels of migration are placing on rental prices without a corresponding increase in property supply. The report predicts a shortfall of 106 new dwellings by 2027 and 79,000 homes over the next decade. Analysts believe that chronic housing shortage will maintain or even increase the price of existing homes. SQM Research's Managing Director Lewis Christopher stated that the significant rise in migration has led to an increase in underlying demand for real estate, which has manifested in the rental market. He referred to it as a current situation as a rental crisis. In Sydney, rents in several outer suburbs have risen by more than 30% since early 2020 to January of 2023, which is more than triple the increase seen in some inner city areas. Without significant policy intervention, Australia's housing crisis is expected to worsen. Reserve Bank Governor Philip Lowe called on local, state, and federal governments to take action to prevent further decline in housing affordability. He pointed to zoning, planning, and development costs as critical areas for government intervention, emphasizing the need for a swift response to the fluctuations in population growth. If the housing crisis isn't addressed, there is growing concerns that homelessness will increase. Anecdotal evidence suggests that the current situation will have severe consequences for low-income individuals, potentially leading to a rise in homelessness and exacerbating existing social issues. The Australian Council of Social Services, also known as ACOS, shares these concerns. ACOS CEO Cassandra Goldie reported that 93% of renters that rely on income support are experiencing rental stress due to skyrocketing costs of living. As a result, more people are being forced into homelessness, living in their cars or tents because they can't afford rents and there's an insufficient supply of social housing available. Furthermore, these individuals are already being forced to make appalling choices between essential needs such as food and medicine in one of the world's wealthiest nations. ACOS is urging the government to take action addressing the housing crisis and provide more relief for renters. Potential solutions include increasing the supply of affordable housing, investing in social housing, and implementing policies that prevent excess rent price growth. Without targeting intervention, the rental crisis is expected to continue, leaving more individuals and families struggling to afford to put a roof over their head. The Australian rental market is currently experiencing unprecedented levels of stress, with large portions of the population relying on rental properties for housing. Various factors have contributed to the current state of the rental market, such as record high rental prices, historic low vacancy rates, and a resurgence of population growth due to international migration. The demand side factors primarily include a decrease in the average house size and a sharp increase in international arrivals since the reopening of the borders. These factors have taken the government and the RBA by surprise and have led to a significant surge in rental demand. On the supply side, rising interest rates, decreased building activity, and an increase in short-term accommodation have negatively impacted the supply of rental properties. In 2023, renters are unlikely to experience any relief, with inflation predicted to hit 7% by the end of the year. While a partial reversal in the trend of small houses may alleviate some pressure, the rental market is expected to remain tight. Capital cities are currently experiencing the most significant strain, with vacancy rates under 1% in all 6 states. Rental inflation in Sydney and Melbourne has remained less acute than in other smaller cities. However, the influx of migrants since international borders have reopened in early 2022 is likely to continue to exacerbate the situation in these cities. Brisbane, Adelaide, and Perth are experiencing low vacancy rates, sitting at 0.9, 0.5, and 0.6 respectively, according to the Real Estate Institute of Australia. Such tight rental markets have not been seen since the period just before the global financial crisis happened, when rental prices were also rapidly increasing. And remember to like, share, and subscribe to keep up to date with all things property and finance. Melbourne remains an outlier with vacancy rates at 2.8%, which is still below the 3% healthy threshold. The combination of softer population growth due to COVID and above average building approvals over the past decade have likely contributed to Melbourne's looser rental market. However, Melbourne's rental market is expected to tighten as population growth strengthens. As the rental market crisis persists, the Australian government will need to take action to address the issue. A combination of short-term and long-term measures will be necessary to alleviate the pressure on the rental market. Possible solutions here include increasing the supply of housing, as well as making it easy to get building approvals through local government levels, as well as investing in social housing. Did you know here at Hunter Galloway, we are a mortgage broker and help people Australia-wide. So if you're a first homeowner or looking to get an investment property, we can help. Call us on 1300 088 065 or visit our website huntergalloway.com.au, where you can fill in a contact form. We can get in touch and review your situation. Guys, as always, thanks for watching, and we'll see you next time.